Hi traders, you're welcome to my channel. I am OT Josh. Now I just did a call trade to the upper direction, even though there is a kind of reversal pattern here. I did that call trade. Maybe I didn't get it right, so I'll do it again. Oh yes, perfect. This was exactly what I wanted to do. I want to do this call trade below this place. So definitely I'm going to win this trade, and I'll tell you why I did this trade by the end of this video. So when I did this trade here, I wasn't too sure, but here below this middle Bollinger Band, I am I am very sure of it. That's why I went for the trade. Okay, and that is it. Okay, you see, I think we lost the first one if I had not done it here. So we'll wait for our next opportunity. Let me see what we have. Um, okay, the market is going up now, and here we have sellers here. As you can see, sellers are already reacting with it. So when this candlestick closes, depending on how it closes, we are going to do a put trade from here. So let's wait and see. We'll be going now with 500 to be on the safe side. Okay, now for us to do that put trade, I want you to understand that this is a 1 minute expiration trade, so you have to be careful. You have to get your key levels right. So this is where we want to take that trade from. We want to take that trade from here. Oh, here. Let's see. Okay, yes, that's exactly where the trade should be taken from. So I did the trade there. Let's see how the remaining time goes for us. This is exactly when you trade for 1 minute expiration, and your entry point is very crucial. You don't just take any trade the way you like. If I were to be taking this trade for 3 minutes, fine, then I can take it here at anywhere, because I know that by the end of the third candle or the third minute, this must have gone far into my intended direction. Okay, one and okay, so now let's go for the last trade. Okay, I will be going now with 300. So this is how I do my money management, because you see the first trade was I don't 1000, so I went with 500. So because I'm winning, I'm going again with 300. So I missed this call trade. Why? This is a call trade because if you look at this week here, there was a rejection from sellers after this reversal. So it came back again, the rejection. But now, when it came back again, I was supposed to see a weaker body. But this strong body shows that buyers are somehow in the market. So after this candlestick here, that was this candlestick where buyers are strong, you don't just go into a call trade here because buyers are strong. This is a ranging market, not a trending market. So you wait for this candlestick to come back to this same place, this one deviation. Now this candlestick may be going up, but this is a ranging market. You may think it's going up, but at the end of the day it will come back down. So you have to wait. When this candlestick comes back here as a red candle, then you go. You see what I'm explaining now is exactly what happened here. That was why I said when I saw this candle and I saw this red candle coming back, closing at this place, I did my trade below because I know it will go up. So you don't take this trade. It looks good, this candlestick looks strong, but you don't take this trade if you ever want to trade. Okay, now I think if the market closes like this, then there may be room for sellers to come in. what's happening. Okay, before we go, I'm going to explain. Okay, this is the first trade I took. Like I said, we had a reversal pattern here, kind of an engulfing candle, and price went up. I'm going to When price went up, what we saw was that this particular candlestick got triggered. Buyers was triggered at the middle Bollinger Band. So all we need now, since we know the points where buyers came in strongly last, all we need is for price to come back to that point again. And when price came back, I saw this little wick. I did a call trade. I did it at the wrong entry, but I later took other trades at this point and I got that in the morning. Now, when this thing happened, even though it's a buyer's pressure, you see that from here sellers now came into the market, leading to our next trade. Here sellers came into the market, and since sellers are in the market, that means they will come again. That's how the market works. So I waited to see that sellers coming again, and here they are. So since they are here, we need a good entry point. I just marked the place where sellers are, waited for price to go above that place, knowing that they will come in again, and I did a put trade. So that is it. Sellers came in, but you see the selling pressure is weak. Now, there is something they call failure, and I think this is what is going to happen here. Failure shows direction. So I'm going to do a call trade now for my last $500 trade. I'm doing a call trade because of the failure I saw, and then at the end, I'm going to explain why I did this trade. Now, to save time, I'm going to explain it immediately. Now, if you look carefully at this candlestick here, there is a round number here, right? Um, yes, a 300, or am I? Yes, 300. Now, this round number shows that sellers will definitely come in. You see our price went up there and created this shooting star. So sellers are supposed to come in. Watch what happened. Sellers came in, but one way or the other, buyer's pressure, boom, came in. I have shown this in some of my past video. It's a very reliable signal, the failure strategy, because we know already that the market is going upward. We know this is an upward move, but one way or the other, stubborn sellers came in inside one candle. One candle will never reverse a strong trend, because you see a one pattern, it will never reverse a strong trend. So what we do is simple. We just wait for these sellers who are not aware, who only trade based on candlestick, they don't understand market sentiment. We wait for them to come in and for the market to ride along, leaving them behind. And when the market does that, all we need to do is a simple call. For a downtrend, a simple put. And it works better in a downtrend. Actually, yes, it works better because the strength of a downtrend is much more stronger than that of an uptrend, based on the emotion involved, because downtrend is moved by the emotion of fear, uptrend greed. So fear is a stronger emotion than greed, so the downtrend is always going to be stronger than the uptrend. So if this is your first time in my channel, please do it to share, like, and subscribe to the channel. If you want the mentorship program, you can contact me with my email address or my WhatsApp link at the description of this video. If you need the ebook, you can contact me with my email address, the WhatsApp address at the description of this video. Also, if you need questions concerning the new Signal Telegram Signal group, yes, you can contact me as well, and I'm going to tell you everything you need to do. So until next time, I wish you happy, safe trading. Bye bye.